Hey everyone, and welcome. Today, we are going to break down what is easily one of the most important chapters for your board exams, Goods and Services Tax, or, as you know it, GST. My goal here is to make this super simple, really clear, and get you totally prepped for any question they can throw at you. Okay, so here's our game plan. We're going to start with the absolute basics, like why do taxes even exist? Then we'll get into the big idea behind GST. From there, we'll nail the core concepts, intrastate versus interstate transactions. And to wrap it all up, we're going to apply everything we've learned to solve two real-deal exam problems, including one straight from a recent board paper.
All right, first things first. Before we even get into the nitty-gritty of GST, let's tackle a much bigger, more fundamental question. This is a question that really sets the stage for everything else we're about to cover.
I mean, it's a totally fair question, right? We all hear about paying taxes, but where does that money actually go? It doesn't just, disappear. The answer is literally all around you in the services and the infrastructure that we all use every single day.
Well, that money you pay, it's what the government collects to fund all the essential public services. We're talking about our national defense, our military, the roads we drive on, public hospitals, massive development schemes all over the country, and yeah, even the salaries of the government employees who keep all of this running. Simply put, it's the money that builds the nation.
Okay, so we know why we have taxes. Now let's talk about how they're collected. And honestly, before GST came along, the tax system in India was, let's just say it was a hot mess. It was incredibly confusing for just about any normal person.
I mean, look at this. The old system had dozens of different taxes. VAT, octroi, excise tax. The list just goes on and on. Trying to make sense of it all was like walking up to a fruit seller and asking for a Mangifera indica instead of just saying mango. They'd give you a crazy look. It was just unnecessarily complex, and that is exactly what GST was designed to fix.
And that's exactly where GST came in. It was introduced with this really powerful motto. The entire goal was to just sweep away all that complexity and replace it with one single, unified tax system for the entire country. Simple, transparent, and way easier for everyone to understand.
So, this brings us to the real nuts and bolts of how GST actually works. And it all boils down to one simple question. Where is the transaction happening? The answer completely changes how the tax money gets handled.
So think about it. You go buy something, you pay the GST on it, but who actually gets that money? It's not just tossed into one giant government pot. The tax gets split based on a very clear rule. Did the sale happen within a single state, or did it cross state lines?
Okay, let's break down the first type, intrastate. The key here is that prefix, intra, which just means within. So imagine a product that's made in Madhya Pradesh and then sold to a customer who is also in Madhya Pradesh. The whole transaction, from start to finish, happens inside the borders of just one state. And here's how the tax gets handled in that case. For any intrastate deal, the total GST collected is split right down the middle, 50-50. Half of it goes to the state government, we call that SGST, and the other half goes to the central government, which we call CGST. It's as simple as that.
All right, now for the flip side of the coin, interstate. Inter means between, so pretty obviously, this is when goods are traded between two different states. Like a seller in Maharashtra sells something to a buyer over in Gujarat. The goods have crossed a state border.
So what's the big difference here? In an interstate transaction, 100% of the tax, which we call IGST, for integrated GST, goes directly to the central government. Now it gets sorted out between the states later on, but right at the moment of sale, it all goes to the center. That is the key distinction you need to remember.
Okay, theory time is over. The best way to really get this stuff is to see it in action, right? So let's tackle a classic competency-based question that's going to really test if you understand how GST and discounts work together.
Okay, so check this out. We've got a pressure cooker. Marked price is 1,800 rupees. The GST is 12%. A customer walks in, but they've only got exactly 1792 rupees in their pocket. So the question is, what discount does the shopkeeper need to offer? Now here's the real kicker. That final price of 1792 already includes the 12% GST, and that tax is calculated on the new discounted price, not the original 1,800.
So, how do we crack this? It's all about setting up the right equation. Let's just call the new discounted price X. We know the final bill is this new price X plus the 12% GST on X. So that means X plus 0.12X equals 1792. That simplifies to 1.12X equals 1792. A little bit of basic algebra, and we solve for X, and we find out our new selling price is 1,600 rupees.
There we go. The shopkeeper sold an 1,800 rupee cooker for 1,600 rupees. That's a flat discount of 200 rupees. To find the percentage, we just divide the discount amount by the original marked price and multiply by 100. So 200 divided by 1,800 gives us our final answer, a discount of 11.11%. All right, you ready to level up? Because we are about to tackle a question straight from a recent ICSE board paper. This is the real deal. It involves creating a final bill with multiple items and a kind of tricky discount rule.
Okay, so here is the bill we have to figure out. We've got two different items, Article A and Article B. Different prices, different quantities, different GST rates, but you gotta pay close attention to that little note at the bottom. A 5% discount applies only if 10 or more of an article are bought. That little detail is where most people mess up.
So let's start with Article A. The customer bought 6 of them. Was that more than 10? Nope. So, no discount. Easy. We just calculate the total price. 6 times 190 is 1140 rupees. Then we calculate the 12% GST on that, which is $136.80. Add them together, and the subtotal for Article A is $1,276.80.
Okay, on to Article B. Here, 12 items were bought. Aha! That's more than 10, so that 5% discount kicks in. Now you have to remember the rule. Discount first, then GST. The total marked price is 600. We apply the 5% discount, which is 30 rupees, so the new selling price is 570. Then we calculate the 18% GST on that new price. That gives us $102.60. Add that to the selling price, and the subtotal for Article B is $672.60.
And to finish it off, we just add our two subtotals. The total for Article A plus the total for Article B gives us our final correct bill amount of 1949.40 rupees. Boom. Done. See? When you just break it down step by step, it's totally manageable.
Okay, so let's boil all of this down. If you remember nothing else, remember these 4 golden rules. For intrastate sales, tax is split 50-50. For interstate, it all goes to IGST. And when you're doing the math, always remember, first, calculate the discount on the marked price. That gives you the selling price. Then, and only then, do you calculate GST on that final selling price.
And there you have it. That is everything you need to know to absolutely crush any GST question on your exam. I really hope this helps clear things up for you. But before you go, I've got a question for you to chew on. Now that you understand how the system works, what kind of everyday item do you think has the highest GST rate? And, more importantly, why?